Good morning, ladies and gentlemen, boys and peeps. Let's start it off with another stoic parable. This is what we're going to do in these crazy times. This one goes, there was once a pair of traveling monks, one senior and one junior. One day, the two monks met a young lady on the side of a small stream and saw that she was having trouble getting across. Now, traditionally, monks and nuns weren't supposed to come in contact with members of the other sex. So the younger monk was shocked when the older monk offered to carry the lady across. The monks and the lady successfully crossed the creek. The lady thanked the old monk and everyone continued on their respective journeys. This incident, however, troubled the junior monk for days. "Sir, why did you touch the lady? You know you were not supposed to." The younger monk, unable to contain himself after a week, finally asked his senior colleague accusingly. "What?" The older monk was confused. "The young lady by the river," explained the young monk. "We monks are not allowed to touch women." "Oh," the old monk said when he finally remembered the incident. "I put her down by the river," the senior said, "but you're still carrying her." Dun dun. Good morning, everybody, and welcome to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner himself. Today, I am your host. I go by Blind Run on the interwebs and all the gaming circles, and in real life, I go by Matthew. Today, we have tons of crazy topics. We will be covering, of course, Hiveon has enabled Polygon Matic payouts. We have a full-on release announcement from MSI for their new PCIe 5 power supplies. We've been covering those because that will be affecting, of course, all of the miners and how they build out rigs in the near future. We have more details on the Nvidia 8102 GPUs for the 40 series Ada Lovelace. GPUs are getting cheaper as Ethereum's switch to proof of stake gets closer, so we'll be talking about that more. And of course, I have an opinion piece that people were asking about, basically a reaction to. And it is from Hardware Times. It says GPU mining isn't coming back anytime soon. Then we also have a smart contract error that has locked up $34 million in Ethereum for an NFT project. And basically Jack Dorsey talking about many single points of failure for Ethereum. More Ethereum news. The foundation holds nearly 0.3% of all Ethereum in existence. And the markets are down. The Bitcoin death cross, as well as Elon Musk and the Twitter deal is nearing an end, and it looks like the purchase may go through. What a wild time we live in, boys. I highly recommend grounding yourself as much as possible in reality and keeping your head about you and not letting any future worries bother you on a day-to-day basis. Let's go ahead and get into it right after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. Welcome back, everybody. So first things first, we have an update to payments from Hiveon. We've also noticed recently Hiveon Pool has been paying out quite a bit more. I am looking at making the transition back. So if I do, I'll definitely cover the Polygon Network payout setup. But here you go. So on their official page, you have in their payment FAQ here, they fully cover the transaction fees. A Polygon network withdraw funds with no transaction fees with a 0.005 Ethereum minimum threshold. On the main net, withdrawals with no transaction fees when the following two conditions are met. So minimum balance is 0.2 ETH and gas prices are equal to or less than 80. So at this point, basically, they aren't changing the fact that you can still get payouts for free directly on the main layer 1 Ethereum, but they did change the limits, right? So if the gas fees aren't being met, they aren't going to do it. And it now needs to be 0.2 ETH instead of 0.1 ETH. To get around this, if you're looking for daily payouts, you can use the Polygon network. Now, we have done this in the past. If you have something like a Coinbase or a Crypto.com wallet, you can still just go in there and you will have the Polygon wrapped Ethereum sent to either one of those, and it will accept it as Ethereum. And I've confirmed that as well through other mining pools that have had this enabled. For example, I'm trying to think of it now. Flex Pool for one. I know Crazy Pool is on Binance Smart Chain, but it works the same as well because basically any of those exchanges already have all of that tied into their exchange platform. So it's not too big of a worry there. So at the end of the day, it's easy to just go ahead and switch over to the Polygon network on Hiveon if you're using the Hiveon pool. And the Hiveon pool profitability hasn't been nearly as poor as it has been in the past. In fact, for the last 60 days, it is in the top 3 here, which, if you recall, in the past has been, down here in the bottom and performing pretty poorly traditionally. But with kind of not as much going on the Ethereum network as far as NFTs and tons of transactions getting pumped through, the payout methods for Hiveon, or basically the pool, what is it? Yeah, payout methods, or the mining method, right? It's PPS plus, is that correct? Anyways, it's a little bit more stable than if you go with PPLNS. So that kind of wraps that up. Now, coming up soon, we have basically a huge shift in technology taking place, primarily surrounding the way that power is delivered to various components within your PC and within mining rigs, specifically the graphics cards that will be, utilized in the newer generation. The power platform is going to have to change over to PCIe 5.0. And we have the MSI Meg AI 1300p and AI 1000p power supplies, fully ATX 3.0 and PCI Gen 5 ready. So these will be 80 plus platinum, and they say it has a brand new GI engine, whatever that means. But a few months ago, we showed you MSI's brand new Meg power supplies, which are amongst the first to feature the Gen 5 standard. Now we have more details confirming that these PSUs are not just fully PCIe Gen 5 compliant, but are also based on the brand new ATX 3.0 standard. The MSI Meg power supplies will be the top offerings from the manufacturer and initially include 2 variants, the 1300p and the 1000p. There are several features that these PSUs rock besides the ATX 3.0 and PCIe Gen 5 standard. First and foremost, we have to talk about the rated power output. The MSI Meg AI 1300p offers 1300 watts of power, while the 1000p offers 1000 watts of power. The Meg AI 1300p offers 1300 watts of sustained power through its plus 12 rails and 108.33 amps. Its voltage is rated between 200 and 240 volts. Now, the most interesting part about both of these PSUs is the GI gaming intelligence. The new GI is based on an MPU, a smart processor that controls the whole AI-assisted process of the PSU. Some of the main features that GI engine provides through the MSI Center application include real-time power status monitoring, multi and single rail switch. It can switch between single and multi-rail according to the needs of users while taking into account high current output and safety protection, and intelligent fan mode. The other most important thing to note here is that both of these are fully Gen 5 and ATX 3.0 compliant, which means they come with both a proper PCIe Gen 5 connector on the PSU unit and also come with necessary cables. MSI bundles the 1300p and the 1000p PSU series with a 16-pin to 16-pin connector cable up to 600 watts and a separate 16-pin to 2x8-pin plug adapter. The first one is designed for 600 watts of power to a graphics card, while the second can deliver up to 300 watts of power to a graphics card. The rest of the cables that come in the box are included here. A single 16-pin power connector that can supply up to 600 watts of power to the card. You can see that the connector rated for 600 watts of power delivery is Gen 5 compatible and not designed for legacy Gen 2 or Gen 3 cards. With the power supplies and the cables out of the way, next up we have to talk about the PCIe Gen 5 and the associated power excursions. Remember, we talked about power excursions last week and some of the problems that they provide. I think what we're seeing here with the kind of onboard chip in these power supplies is to help manage these excursions, because we are hearing of crazy power spikes all the way up to 2400 watts, depending on, which GPU we're going to be getting in the 4000 series from Ada Lovelace. So it says that the new ATX 3.0 standard is designed to sustain the PC load of up to 200% for 100 Us and 300% sustained power for up to 100 US for graphics cards running on the PCI Gen 5 connector. We have been told that the system with a 600 watt GPU, 300 watt CPU, and 300 watts for the rest of the equipment will have a peak excursion of up to 2400 watts, 200% of its rated wattage, while a 600 watt GPU will require at least 1200 watts of ATX 3.0 standard power supply. The Goldilocks zone seems to be between the 1000 and 1200 watt range for the next gen high-end graphics card. So if you're planning to build a new gaming PC with either a 4090 or a 7900 XT, you better make sure you get a PSU with the respective wattage range on the ATX 3.0 standard. Companies like ASUS have announced their ROG Thor Platinum 2 series are Gen 5 compliant, but they haven't stated any ATX 3.0 compliancy yet, and don't feature any Gen 5 connectors too. So the claim is very fishy. Getting a high-end and expensive PSU such as a Thor 2 series might not be sustainable or suitable choice unless ASUS confirms its full ATX 3.0 conformity. This truly puts MSI's PSU lineup as one of the earliest to support the new Gen 5 interface. Currently, there's no word on pricing or availability, but more details are expected to be announced by the second quarter of 2022. Plus, there might also be an even more powerful mega PSU on the horizon. Stay tuned for information on that soon. This also does pose kind of an interesting question for people in the States. Now, I know depending on where you're at and how your power is allocated, even gaming rigs are going to be in an awkward position where, like, let's say you wanted to do two 4090s. At that point, do you need to get, a 220 volt plug just for your PC setup at that point? Because remember, if we're doing a 20 amp by 120 volt, you're really already around that. What is that? That is the 2400 mark, right? So let me make sure. I got to make sure that my in-head math is right, because I remember doing this before when we were building rigs. So 120 times 20, that's 2400 watts. If you have a single power supply, okay, even a single power supply, high-end power supply, and a total system power excursion possibility of literally flipping a breaker in a standard plug, 120 plug in a US home, that's ridiculous, guys. That's absolute insanity. And they're mad at miners for pushing more power. Come on. What is this? What is this? Gamers are going to be flipping out, looking up mining videos on how to basically go ahead and be able to run more than 2400 watts. Wow. And if we get even crazier power supplies that are like for a high-end system, you're just sitting at like, you need like a 2400 watt power supply just off the bat. Also, what's interesting is like when they announced this too, if you look here, it says its voltage is rated between 200 and 240 volt, not 120. Are we really getting to the point to where you will not be able to run a gaming system on a standard 120 20 amp plug in your office? I mean, that is where the potential is, right? At this point. Wild. That is actually like a problem that may be coming. Tommy says that it's only if for the 100 U's, so then the capacitors take that load, hence the 2400 watts. Yeah, but I'm talking about if we go above that, right? So I don't know. Anyways, they have other power supplies on the way. I don't think, like, obviously Crossfire and NVLink is not going to run on a standard 120 volt 20 amp plug. I don't think. At least off the top of my head, I don't think that that's going to be possible. Let's talk about more, though. Well, let's get an idea. Nvidia 8102 GPUs powering next-gen GeForce RTX 40 series, rumored to stick with the PCI Gen 4 protocol. Okay. So Nvidia's GeForce RTX 40 series graphics cards based on Ada Lovelace GPU architecture are expected to retain their existing Gen 4 compliancy, as reported by Copite. Nvidia will be launching its RTX 40 series graphics card based on the new Ada Lovelace GPU architecture later this year. The specifications and specific configurations for graphics card lineup have already been leaked, but the design of the card themselves is a more interesting aspect. So far, we know that the Nvidia GeForce RTX 40 series graphics cards will adopt the new ATX 3.0 compliant 12 PVH PWR 16-pin connector, which allows for up to 600 watts of power draw through a new PCI Gen 5 power connector interface. This power connector has already been featured on the 3090 Ti and currently allows for up to 450 watts of power draw through a triple 8-pin adapter. But there's another aspect to allow the full PCI Gen 5 compliance, and that's the interface connector itself. Currently, modern graphics cards communicate with the CPU through a Gen 4 protocol. The Gen 4 protocol allows for 64 gigabytes a second of total and 32 gigabytes a second of bidirectional bandwidth. But the latest platforms from Intel and AMD support the brand new Gen 5 interface protocol. This new standard allows for up to 128 gigabytes a second of total and 64 gigabytes a second of bidirectional bandwidth. This will essentially double the bandwidth, but it looks like the upcoming graphics cards for the, or at least the high-end RTX 40 graphics cards based on the 8102 GPU won't feature the Gen 5 interface just yet. Based on a tweet from Copite, the upcoming RTX 40 lineup will retain the Gen 4 protocol, which is a bold move by Nvidia for not hopping on the next-gen standard, even though they are doing so in the HPC segment, where their Hopper GPU will be amongst the first to utilize the new protocol. Now, it makes sense that the HPC lineup features it because servers require a lot of bandwidth, and the Gen 5 protocol will help those environments. As for consumers, the PCIe Gen 5 interface is just too much bandwidth, and current GPUs are yet to fully saturate the Gen 4 interface. Now, having Gen 4 bodes well for entry-level lineup, which doesn't need to worry about bottlenecks if they are equipped with lower lanes, as well as the case with the RX 6500 and 6400 series, which when switching over to Gen 3 standard end up with less than required graphics bandwidth, leading to poor performance versus the Gen 4 compliant standard. If the high-end lineup isn't starving the Gen 4 standard, then the low-end lineup is far from hitting the max threshold. So far, we can't say for sure if Nvidia will truly retain the Gen 4 on its upcoming 40 series cards, but that could change as marketing does like having the Gen 5 logo for the new cards. Aside from Gen 5 and Gen 4 supports, Nvidia is also seemingly going to make major changes to the way its CUDA cores are arranged within Ada Lovelace architecture. The GPUs for the RTX 40 series will not just be a simple CUDA core bump from Ampere, but could include a range of new mixed precision cores that aren't detailed yet. The lineup is still a few months away from introduction, so a lot could change, but we'll make sure to keep you updated. Now remember, what we're seeing with 7000 series from AMD is going to be a chiplet design, which could in theory give AMD and Radeon a significant advantage over Nvidia on this next release. So it should be interesting to see what happens. Obviously, what it sounds like is Nvidia is playing around with another way to go ahead and compete with Radeon from that perspective. Not dissimilar from Intel going to basically utilizing this kind of hybrid core setup of having, efficiency cores and performance cores on the 12,000 series to go ahead and catch up to the Ryzen chips, at least in multi-core performance, but also still retain their high gigahertz or per single-threaded performance over AMD, which is kind of the route they took. And we'll just have to go ahead and see how this lines up. But either way, I think we're getting very cool technologies coming up from both Radeon and GeForce. Problem being, of course, as we go back to these crazy power requirements, they're going to make it, from a mining perspective, probably not very attractive, if I had to say the least. I mean, even these 1300 watts power supplies that are coming, at best, are going to be able to power like 2 of them while mining, and you still have to worry about those power spikes. And you're not going to be wanting to run anything but platinum rated PCI Gen 5 ready power supplies for the new GPUs. And that means, from a miner's perspective, kind of having to get rid of a lot of your old power supply equipment and upgrade. And even then, you're not going to be able to power like massive rigs of 6 to 12 cards kind of thing, unless, of course, we see some new designs on breakout boards come from Parallel Miner. But because of the way breakout boards have to be developed, and they're kind of always way behind the curve, it's probably going to take a long time for them to ever get to that point either, because all the equipment will have to release first, all the new standards will have to release first, and they'll have to reverse engineer all of that and figure out what they're going to do with their new designs. Let's talk about GPUs getting cheaper. As Ethereum switch to proof of stake gets closer, the network's planned switch to proof of stake has been pushing prices of graphics cards down. Graphics processing units, which are used for mining Ethereum, are getting cheaper as the network prepares to switch to a proof of stake model from proof of work, which will render these computer parts virtually useless for those mining Ethereum. The asking price for popular GPU models on eBay has dropped by 37% since May 2021. When Chinese authorities issued a renewed crackdown on crypto mining in the country, CoinDesk calculated using data from Tom's hardware. But the price drop has accelerated this year as Ethereum developers have been testing the proof of stake model, and the price of the second largest cryptocurrency is slumped. The price of 10 major GPU models on the online marketplace dropped by 7.4% in January, and 9.5% in February, and 12% in March. Crypto mining accounts for about 35% of the consumer demand for GPUs globally, Tristan Guerra, managing director and senior analyst for semiconductors at investment bank Robert W. Baird, told CoinDesk. GPU miners, quote, are not really investing in new equipment at the moment since prices have been high for a while, end quote. And, quote, most of them are likely waiting for when Ethereum moves to proof of stake to buy the second-hand GPUs, end quote, from those who will give up when the shift happens. Joe Downey, chief marketing officer at hash power broker NiceHash, told CoinDesk. It is widely accepted as a poor investment right now since the ROI, return on investment, is much longer, Downey said. The network's hash rate, a measure of computing power, has been relatively stable since the start of the year, data from information platform Etherscan shows. When Ethereum eventually moves to proof of stake, even more GPUs will be dumped onto the secondary market, and prices will likely spiral even further, Gettr said. Adding to the downward pressure is that the price of Ethereum has been relatively low while the difficulty of mining has increased. And it's important to note this because I've been getting this question, why is the difficulty increasing? We're still sitting around between 978 terahash a second to about 1.06 petahash a second, somewhere in between there. It's not really going up a lot, but the difficulty is starting to increase. Remember, we are starting to see the difficulty bomb go off. It'll go off in May, and it's going to start ramping up very, very quickly. Don't freak out, though, because we have confirmation at this point that, of course, we will see a delay in the release of the merge, which means that they will naturally have to defuse the difficulty bomb. And when they defuse this difficulty bomb, we should see a stiff drop in difficulty as well. It'll be an instantaneous drop as soon as that difficulty bomb is diffused via an EIP. We should get an announcement for this on Friday, which will be the April 29th all core devs call for Ethereum. So tune back in Friday at some point. We'll probably be making an individual video just covering that call for you guys this weekend. And we should have a better idea of kind of the future of Ethereum, what we're looking at with the merge, and have better timelines ready to go. I don't have anything right now. I just want to mention that's kind of what we're waiting for, and also why we're seeing some of this difficulty increase. When Ethereum eventually moves to proof of stake, even more GPUs will be dumped on the secondary market, and prices will likely spiral even further, Gettr said. Adding to the downward pressure is that the price of Ethereum has been relatively low, while the difficulty of mining has increased. The price has picked up a little recently, but quote, there is still some distance to the previous peak, end quote, said a spokesperson for F2 Pool, the second largest Ethereum mining pool by computing power, according to information platform Mining Pool Stats. At the same time, the difficulty of mining Ethereum continues to rise, and so GPU miners' mining revenue is declining continuously, the F2 Pool spokesperson said. When Ethereum network reached record difficulty in December, NiceHash saw about 300,000 miners drop off its platform, Downey said. In February, the war in Ukraine depressed crypto prices, which in turn made mining less profitable, and so GPU prices fell even more, said how? I don't know how to pronounce that one. I give up on that one. A sales rep from Zuzin Science and Technology, a company that resells mining machines in China. Estimates that only 20% to 30% of crypto mining equipment was in China has been sold after the crackdown. Since the ban, the domestic market has been, quote, flooded with a lot of secondhand equipment. And although most of this is ASICs, there was also some big GPU mining there. This also brings prices down, Downey said. In the past month or so, slowing consumer demand in China and Europe has led to even more excess inventory, pushing GPU prices even low, Gettr said. For that reason, the investment bank downgraded chip maker Nvidia's stock to neutral from outperform earlier this month. So we do know, we talked about TSMC removing crypto mining from their reports, their quarterly reports to the board members. They are not wanting to basically experience what they did previously, which was they were super high, previous bull run on crypto mining being a major portion of their market. And that really turned around to bite them in the butt as far as from a market standpoint. And so a lot of these companies are approaching it a lot more cautiously, and they are predicting from their actions, it seems they are trying to predict that we will be through that bear market. Should you freak out about that? Well, no, we're going to utilize this time to build up bigger and better and stronger, for the next bull run. So you will see that happen typically through the same super cycle sometime in the end of 2024, beginning of 2025, after the next halving of Bitcoin. So, as long as you're playing the game, you're playing the game. I get this kind of question a lot where people are like, it's dead, I'm getting out. And and that sort of thing. It's ridiculous and so on. And you got to keep in mind that this has all happened before. History repeats itself, and in the digital age, it repeats itself on a much more frequent basis. I've been listening to a book called The Sovereign Individual, and it is funny how they did state, and this was written back in the 90s, they do state in that book that the transformation into the digital age and the transformation to the changes within society and to the nation states will be at an accelerated pace compared to any other previous revolution or transformation like the industrial age or the agricultural age and so on, because the digital age is just naturally going to accelerate that. And one of the things is like, you can always use obviously like history as a predictor. And the crazy thing is now is within a lifetime, we can start basically seeing these things happen at a very much more accelerated pace. And all you really need to do is pay attention. Let's talk about this opinion piece that people wanted me to react to. It's Hardware Times, and it says GPU mining isn't coming back anytime soon. So, and this is saying that, the 3080 Ti is only doing $2 a day. There have been reports from multiple outlets stating that GPU mining might make a comeback. These primarily stem from a few recent announcements. Firstly, miners have been able to get around the LHR limitation on Nvidia's 30 series GPUs almost completely. Second, the Ethereum 2.0 merger to proof of stake model has been delayed by another couple months to the third quarter of 2022. Although these fears are legitimate, there is very little chance of GPU mining making a comeback. For starters, the Ethereum mining difficulty is at an all-time high. Once again, it's always funny to read these things from people that don't understand what's happening on the Ethereum network in relation to how there is a specifically artificially difficulty increase via the difficulty bomb. And if they understood that, and they understood that the delay by nature will cause that difficulty to drop significantly, then you would basically be like, oh, okay, whoops, well, there you go. But that's okay. This perception's fine for us. We know, we don't need everybody else to know, right? So, for example, an RTX 3080 Ti generates just over $2 a day, which means you'll be needing nearly 2 years to just break even. When I first started purchasing, once again, for the second time, the ROI was, typically around a couple years. It started getting under a couple years right near the end of 2019. But 2-year break even, once again, everything is getting accelerated extremely quickly. It's really funny that the perception of a 2-year return on investment is poor, when traditionally, if we looked at any other age within society, you would look at a 2-year return on investment as good. But in the case of mining, it's not good, apparently, right? So it's kind of funny to see this shift. That is if you manage to buy a card at MSRP, and that's for one of the best mining GPUs out there. I would disagree on the 3080 Ti being one of the best out there. Look. The 3080 Ti is not the best GPU out for mining right now. Don't listen to them. Secondly, GPU supply from both Nvidia and AMD is improving by leaps and bounds. True. So much of analysts have degraded the chip maker's stock, fearing another crypto hangover due to excessive channel inventory. Once again, we talked about this. TSMC removing it from the budget, right? Or from the reports. Sorry, the quarterly reports that they present to the board, they've removed crypto mining from there. We are very, very clear that from an infrastructure standpoint, from hardware standpoint for crypto mining, that they are bearish. All of the manufacturers for hardware are very bearish right now. Thirdly, as vendors brace for the launch of the next-gen RTX 4000 series and 7000 series, we'll see even more SKUs hit the market. Chances are that these new graphics cards will come with anti-mining measures as well, further discouraging GPU mining. Overall, it looks like crypto mining won't be making a comeback anytime soon. So we have to basically make it very clear that we would be talking about GPU crypto mining specifically. And then whether or not the 7000 series would truly be putting these locks in place. We also see a little bit more bullish behavior from a mining perspective from Intel as they are moving into application-specific integrated circuits for manufacturing. And on top of that, seem to be releasing GPUs that will be targeting, from my perspective, at least at the high end, some miners in general. So we have more GPU manufacturers coming in. I have not heard of anything from Radeon that they would block any sort of mining. The only potential for blocking mining would be, of course, the RTX 40 series from Ada Lovelace. And from what we've seen from power requirements, it doesn't look like we would be utilizing those for mining anyways, necessarily. You also have to take into account that Nvidia has not done that with any of their data center line of GPUs, and they are significantly increasing the bandwidth by moving them obviously to Gen 5 like we've talked about with Hopper, and then in addition to that have that HBM2E, which would be a lot more efficient. You may just be buying fewer GPUs at really high-end or data center prices and putting those in for mining. That is a potential in the shift of the crypto mining market from my perspective. Alternatively, for the smaller rigs or for the entry level, you would probably be looking at purchasing either old used cards off the market that get dumped when everybody is getting out, or you will be purchasing Intel GPUs. That's kind of how I see it right now. Now, Ethereum in some trouble. A smart contract error locked up $34 million of ETH in an NFT project. Let's get into it. So, Aku Dreams, an NFT project, was struck by a griefing exploit Friday via its refundable Dutch auction, from which the hacker did not profit, but the project's smart contract was afterwards frozen with $34 million in money. Fubar, a cryptocurrency developer, published code demonstrating, quote, the Aku Dreams contract permanently locks up $34 million or 11,539 ETH. The Aku Dreams Twitter account, Akutars, and acknowledged the exploit and stated, quote, we are locked down and consulting with some of the best on future steps, end quote. We will mint your NFTs and reveal them as soon as we can. We will also endeavor to provide monies to pass holders who bid with the goal of getting a price, 5 ETH less than the final price. Several hours later, a tweet stated 0.5 ETH refunds for pass holders will be fulfilled ETA Monday or Tuesday. Why? The bank reopens on Monday. The funds will come from the chapter treasury. Akutars will be airdropped. And then it says contract is being audited to verify accuracy. ETA Sunday. Watch for the official Akutar OpenSea link. So essentially, in the screenshot, there was just one line of code that doesn't allow for this money to get basically withdrawn. And the problem is that we have lost basically $34 million worth of Ethereum locked into a contract basically permanently. Now, this is extremely interesting because also what we've seen now is a decrease in the price of Ethereum directly after. And are those related? I think they can be a part of it, but there's even more because we also have public figures talking about Ethereum and warning against it. So there's a lot of FUD surrounding Ethereum specifically right now. This says many single points of failure. Twitter founder Jack Dorsey issues a stark Ethereum warning amid price volatility. Jack Dorsey, the Twitter co-founder who quit the company to transition his payments company Block towards Bitcoin, has developed a reputation as a so-called Bitcoin maximalist, regularly trashing Ethereum and other similar cryptocurrencies. The Ethereum price has swung wildly over the last year, but it's up around 30% compared to this time last year, leaving Bitcoin and many other major cryptocurrencies in the dust even after a radical Ethereum upgrade was again delayed. Now, Dorsey has made a scathing attack on Ethereum, warning it, quote, has many single points of failure, end quote, and calling Ethereum-based projects not interesting. If you're building on Ethereum, you have at least one, if not many, single points of failure and therefore not interesting to me, Dorsey said via Twitter in a response to a post from Deso, a crypto-based social network formerly known as BitClout. Earlier in the thread, Dorsey said he doesn't, quote, believe any individual or institution should own social media or more generally media companies, end quote, and they should, quote, should be based on an open and verifiable protocol. Someone took a fat old red pill this past week, boys. The debate sparked by a tweet from Vitalik Buterin, an Ethereum co-founder and the project's spiritual leader, who was weighing in on Elon Musk's attempt to take over Twitter. Quote, don't oppose Elon running Twitter, at least compared to status quo, end quote, Buterin posted, adding he didn't like the idea of wealthy people, organizations, or governments buying social media companies. Same, Dorsey replied. Last year at the Bitcoin 2021 conference in Miami, Dorsey said, quote, Bitcoin absolutely changes everything, end quote, adding, I don't think there's anything more important in my lifetime to work on. Speaking before he quit Twitter, he said, if I were not at Square, now Block or Twitter, I would be working on Bitcoin. Ethereum and similar contract blockchains, including its biggest rivals BNB, Solana, Cardano, and Avalanche, stand apart from Bitcoin despite being based on similar technology. Bitcoin, with its finite supply of 21 million coins and focus on decentralization, has developed a reputation as, quote, digital gold, end quote, while Ethereum and others are trying to build the foundations of a blockchain-based internet, something that's become known as Web3. Dorsey, who has said Block will never invest in Ethereum, has previously criticized the idea of Web3, claiming it's overly reliant on venture capital cash and not owned by the people. I think I could get behind that understanding. I get that perspective. He says, quote, I am officially banned from Web3, end quote. Dorsey posted to Twitter in December last year in response to being blocked by renowned venture capitalist Mark Andreessen, a prominent Web3 investor. Obviously, these are a bunch of people with money butting heads, but that should obviously give you, or at least from my perspective, a pretty clear sign of the difference between Bitcoin and pretty much everything else, right? Once again, whenever I get into this, I just give the whole statement of like the fundamentals of Bitcoin, why that matters, why it's set apart from everything else, primarily the fact that you don't have a founder that is active, you don't have any organization sitting behind kind of the curtain controlling the development and the path. And this can be further seen in Ethereum, as we see in this news article from Decrypt, which says Ethereum Foundation holds nearly 0.3% of all Ethereum. The foundation spent $21.8 million on Layer 1 research and development as it prepared for the Ethereum merge. The Ethereum Foundation treasury has $1.3 billion in Ethereum and $300 million in non-crypto investments and another $11 million in other cryptocurrencies, according to a 2021 financial report released today. As of March 31st, 2022, the foundation's Ethereum holdings amounted to nearly 0.3% of the entire ETH supply. The foundation regularly announces grant spending and donations on its blog, but this is the first time it has published an annual financial report. As the network matures, the foundation has been supporting third-party allocators, said Ethereum Foundation Director Aya Miyaguchi. Quote, we believe that more decentralized funding is important for the future of Ethereum ecosystem, end quote, Miyaguchi wrote in the report. Quote, we continuously try to allocate resources to third parties that we believe can make better decisions than us within certain domains, end quote. She said on Twitter that she'd provide more details of the foundation's vision and principles at DevConnect event in Amsterdam. Here's the tweets. Last year, the foundation spent a total of $48 million. Layer 1 research and development accounted for $21.8 million, including the Ethereum mainnet upgrade and external grants for network stress testing. The Ethereum merge, which will transition the Ethereum network to a proof-of-stake consensus model, was recently pushed to Q3 of 2022. Quote, it won't be in June, but likely in a few months after, end quote, Tim Biko, an Ethereum core developer, said on Twitter. Quote, no firm date, but we're definitely in the final chapter of proof of work on Ethereum. Community development accounted for $9.7 million. Developer platform accounted for $5.9 million. Internal operations and support accounted for $5.1 million. Applied zero knowledge ZK research and development accounted for $3.6 million. Layer 2 research and development, which includes developer tooling and software development kits, accounted for $1.9 million in spending. The report also said that the foundation gave out $19.6 million in grants through its ecosystem support program. So, going back to like Dorsey's point of view, one, he says there's many points of failure. Where do these points of failure usually come into? In my opinion, it comes in through people, right? So when we talk about any project, it's usually less of a technical problem and more of a people problem. And if you have an entire foundation that is dispersing funds based on what they think is more important without the input, this is really all off chain. So without the input of the people that power and utilize the network, I think you have an issue. And this is what definitely does set Ethereum apart from Bitcoin, or as we may see it, Bitcoin apart from Ethereum. And from the miner's perspective, it really does push me back into that feeling of I'd rather as a miner be supporting different networks, primarily something like Ethereum. Like Bitcoin. But we could get into Web3. Do I think Web3 is the future? And I would like to say that I think Web3 is the future, but it does have to pull itself apart from your traditional venture capitalists. I think that I don't know how you build a platform to do that. I'm not smart enough. Just seeing the problem is all I can really do and point out. But even some of the biggest proponents in there that I support, something like Flux, for example, does have, built-in developer fees and does have funding that is outside. Can we separate the technology, into a separate class surrounding blockchain and say, okay, maybe this will be all right? Potentially. But you do get into the same problems that we get into when we talk about, of course, Elon Musk purchasing Twitter, which we can get into right now. And I'll make this parallel so you guys kind of understand my point of view. Twitter is said to be nearing a deal to sell itself to Elon Musk, according to the New York Times and other outlets, 11 days after the Tesla and SpaceX CEO shocked the industry by offering to buy the company in a deal valuing it at more than $41 billion. A deal could be finalized as soon as Monday, according to Wall Street Journal. Twitter declined to comment on the reports. Reports that a deal is imminent come after Musk revealed last week he had lined up a $46.5 billion in financing to acquire the company. Twitter's board met Sunday to evaluate Musk's offer to buy all the shares of the company he does not currently own for $54.20 apiece. A source familiar with the deal confirmed to CNN. The source said that discussions about Musk's bid have been turned serious. The potential sale agreement caps off a whirlwind news cycle that began less than a month ago when Musk revealed he had taken more than a 9% stake in the company and ramped up calls for changes to the social media platform. Questions about whether Musk would actually be able to finance his acquisition of Twitter swirled in the days following his takeover bid, especially after he said in an interview the day of his offer that, quote, "I'm not sure I'll actually be able to acquire Twitter," end quote. Shares of Twitter had been trading noticeably below the offer price in a possible signal of investor skepticism about the deal. On Monday morning, however, Twitter stock rose nearly 5% following the reports, topping $51 a share. If approved, the deal would put the world's richest man in charge of one of the world's most influential social media platforms. Musk has repeatedly stressed in recent days that his goal is to bolster free speech on the platform and work to, quote, unlock Twitter's extraordinary potential. Quote, "I invested in Twitter as I believed in its potential to be the platform for free speech around the globe, and I believe free speech is a societal imperative for a functioning democracy," end quote, Musk said in his offer letter to Twitter. Quote, "However, since making my investment, I now realize the company will neither thrive nor serve the societal imperative in its current form. Twitter needs to be transformed as a private company." In the days following Musk's bid, Twitter's board put in place a so-called position pill that would make it more difficult for Musk to acquire the company without its approval. There were also questions about whether the company would try to find another buyer. However, CFRA senior equity analyst Angelo Zeno said Monday that Twitter's board more seriously considering Musk's offer may have come, quote, from the board's realization that an alternative bid from a white knight may be difficult to come by, especially following the decline in asset prices from social media companies in recent weeks and months, end quote. So, it does look like this is going to be probably more possible, I suppose, or more come to realization fully. Once again, I've talked about this before, and I know that a lot of people disagree with me because what inevitably always happens is that the public only looks at things in binary solutions. It's why in the United States, we're still stuck on a two-party system. It's, well, I'm going to vote for the lesser of two evils, right? And the idea is that Musk is the lesser of two evils here, but we are going further centralized, and I do have some worries surrounding that. Just because I agree with Musk from the perspective of free speech, just because I agree with him on open sourcing the code and so on, it's a moot point if those things don't actually come to fruition. And it doesn't mean that I don't see a potential for the future of social media basically being completely open and built on something like Web 3.0. Once again, I still have the issues with the Web 3.0 and the way it functions within the venture capitalists and developers taking control of everything. You still have this problem of an overseeing governing body that is going to determine what they think is best for the platform and not give the control into the hands of the people. And I think ultimately, especially as I listen more to a lot of different works like the sovereign individual, etc., I think we are moving to that eventually within society where things will get broken down further and further into smaller and smaller forms of governments to basically control all of these different entities that need to be managed. And I think that that is the direction. I'm excited for the future. I'm excited to see this kind of take place and see how it goes down. I do think that it's going to be extremely bumpy ride, and it's going to be interesting to see what happens. But once again, just because I believe in or agree with one side over another doesn't mean that I have to be forced to see things through a binary lens. And I think that we should stop seeing things through a binary lens and see what the future potential actually is for all things, including something like Twitter, and try to push from a public opinion and public perspective, people that are in control of these platforms to move towards that. Now, maybe I'm a little too idealistic, and this could potentially also be, a step in the proper direction. But like I said, I don't like to sit here and say that a company going from, a public board to a centralized single private holder to be necessarily any better. I think it's the wrong direction. So hopefully I articulated that clear enough and will hopefully, make some of y'all think or maybe you guys will think a little bit more broadly and for the hope for the future. But let's get into the Bitcoin death cross so you guys are a little bit aware of what's happening in the market. So here's the market moves. Bitcoin's bear market has plenty of steam left. That's the message from an impending death cross on the lesser followed 3-day chart, where each candle represents 72 hours. The death cross occurs when the 50 candle simple moving average SMA crosses below the 200 candle SMA. Aficionados of technical analysis consider the ominously sounding chart pattern a warning of a more profound price drop. And while its predictive powers are constantly questioned, given it's based on backward-looking moving averages, its past record on the 3-day charts as a doom indicator is perfect. Bitcoin's stalled bear market resumed with prices falling by more than 40% in the weeks following the confirmation of the death cross on the 3. The storm is getting pretty bad here. Let me make sure you guys can see me. It's a storming, boys. Are we back up? We are back up. Perfect. Okay. All right. Cool. So, notably, Bitcoin bottomed out a month later on both occasions. In other words, the post-death cross sell-off marked the final legs of the then bear market. So if history is a guide, Bitcoin could be in for another round of beating before prospects return bright. Bitcoin dropped to $38,300 early Monday as renewed coronavirus outbreak in China threatened to worsen the high inflation growth situation pacing global economy. Ether followed suit, dropping to $2,800 at one point. Excuse me. The lowest since mid-March. Bitcoin's implied volatility or expectations for price turbulence spiked on the aggressive options buying. That was expected, given the implied volatility took cheap or looked cheap compared to its historical standards and lifetime average. The implied volatility is mean reverting. Therefore, savvy traders buy options when the IV is cheap and sell when it's expensive. There you go. So right now, Bitcoin sitting at $39,270 and Ethereum sitting at $2,887. Let's get into mining profitability for the day, and we'll get going. Sounds like the rain stopped again, so we're good. I actually have really bad. I have a rig offline right now. So we're at 5 gigahash for the current hash rate. Average hash rate over the past 24 hours, 4.81 gigahash a second. The profitability has been pretty bad. Yesterday was only $169 and 0.058 ETH. Really terrible. Today it's projected to be a little higher, so profitability is up, and we're getting more Ethereum at 0.065. But the US dollar, thanks to the drop in the price of Ethereum, is only $188. Pretty rough stuff going on in the mining markets. We do have, of course, some Varus coins still being mined. We have a couple more supports over here. 3700X, thank you. And Real Ragos is still mining. Seems like he got his back up and running. So thanks for the donations there. For the Varus coin, we're earning probably between 1.2 and 2 a day is what I would assume. 1.98 for the past 24 hours. What to mine? RTX 3090, 10 cents a kilowatt hour. Adjust the Zell hash, calculate out. What are we looking at? Wow, huge dips in profitability on Ethereum, well below $4 a day, $3.53 a day after power. Pretty rough stuff. Cero is coming in second place at $2.64 a day after power. And nice hash for Zell hash is at $2.52 a day after power, still above mining Flux directly at $2.44 a day after power. Equilibria is at $2.58 a day after power, and Conflux at $2.27 a day after power. Scrolling down, we can see that we have Ethereum Classic at $1.92 a day after power, and Ravencoin at $1.82 after power. Ergo at $1.92 a day after power, not dissimilar from Ethereum Classic. Taking a look at, of course, Ethereum difficulty here and all that fun stuff, we're at 1.05 petahash a second. No real changes. Of course, we are still getting difficulty increases. Let's take a look at the big dog just to make sure we're good over here. 189 exahash a second. That's a pretty big dip off, is it not? I believe it is. Yeah, we were easily over 200 exahash a second all week, so we've dropped 11 exahash a second. Can we see where it's coming from? SHIB crypto? Maybe, not really. No specific pool. Is there a pool offline that's big? There's not a big pool that's offline that I see here. So a drop in hash rate, or we have basically the hash rate going solo, potentially. Or something wrong with the API. Let's take a look at Flux. Flux is still at 2 mega solutions a second with the random spikes, obviously from NiceHash going on there. Let's take a look at Ergo. Ergo's at 15.64 terahash a second. Not really any changes. The difficulty is starting to settle in right here. It can be nice to see the difficulty settle in for a little bit more of an extended period of time on Ergo. Let's take a look at Raven Coin. Raven Coin's still around like that 3 to 3.5 terahash a second. No huge changes. And Ethereum Classic. It's had a huge hit in price, down to 32.57 a piece, and we have just seen a huge dip in hash rate right here. It has gone down from 29 terahash a second, about 30 terahash a second, down to 27 terahash a second. We maybe will tomorrow start to see difficulty drop as well then on Ethereum Classic. That should be an interesting one to keep an eye on. Mining pool profitability. Last 90 days, Flex pool in first, mining pool up in second, F2 pool in third. Last 60 days, F2 pool in first, Flex pool in second, Hiveon in third. Last 30 days, F2 pool in first, Flex pool in second, Crazy pool in third. Last 21 days, Crazy pool in first, F2 pool in second, Flex pool in third. Last 14 days, Crazy pool in first, F2 pool in second, Hiveon in third. Last 7 days, F2 pool in first, Crux pool in second, Hiveon in third. Last 3 days, Crazy pool in first, F2 pool in second, Crux pool in third. And for the last day, Crazy pool in first, ZET in second, and F2 pool in third. ASIC miner profitability, we have the Jazz miner at 138 US dollars today. The Silicon A11 at 79.08. The KD6 at 75.11. Antminer L7 is up to $50 a day directly on Doge. Would be a little bit more if you merge mine, but not too much more. And then scrolling down, we have the S19 Pro kind of dropping down from that $17 a day last week near the end of the week to $14.53 a day. Let's get into questions and answers. As always, super chats are never required, always appreciated. First to be answered because they're highlighted. Second, if you have a question, make sure you tag at Son of a Tech. It will highlight the beginning of the message orange. Please do it at the beginning of the message, and it makes it easier for me to basically be able to read. So let's get into it. I want to thank everybody that stopped by today. We hit a top peak concurrent viewer of, I believe it was like 419, which was cool. But we are having connection issues, so we'll try to do it. Renovated says, please cover BIP 119. I'll add that for tomorrow, bud. And take a look at it. Texas Ace says, ask Son of a Tech, power supply tripping breakers, the reason they're specifying large capacitors. Yeah, we covered that while we were talking about it, is to account for the large power spikes, so it will not trip breakers. I understand that, but once we get to the point of building larger and larger PCs, well, my stipulation specifically is I think that we are going to see power supplies that aren't even allowing 120. That's what it's looking like. Second of all, if we're looking at anything that has to do with either Crossfire or multiple GPUs, you won't be able to run it either way. Crypto Digger says, at Son of a Tech, did you have the chance to read my email with the subject ideas for the overheating issue? I do not think so, but I mean, I'm moving anyways. Jeff says, at Son of a Tech, April Fool's joke still going strong. Get Rick Astley in your feed daily still. Real Regret says, at Son of a Tech, can you elaborate a little bit on your mining strategy if you mine to expand, but you also mine spec coins and some solo mining, right? So the solo mining is specifically in relation to the spec mining, right? So you have to essentially you have to solo mine to spec mine, right? Like, that's kind of the idea. Like, if you're mining to a pool for spec mining, typically by that time it's no longer speculative mining, right? So those two kind of go together. And I only really do that very infrequently around projects that I think have potential, right? That's kind of where it's at for me. Then I've been mining, obviously most profitable with Ethereum. Most of that still to this day is going to go into reinvesting into the farm. If you are fully invested into cryptocurrency and cryptocurrency mining, you have to continue to expand. To get fearful and to stop expanding means that you might as well just give up and pack it all up and sell all the cards. So I don't want to do that. So I just naturally need to continue to expand, right? And I think that anybody that is getting into mining should understand that that is the potential. The potential is sure, the bottom falls out. GPU mining is no longer profitable at all. I guess at that point you could try to liquidate what GPUs you have and replace them with ASICs. For Bitcoin, I don't think Bitcoin mining is going anywhere. It's a lot more difficult to get into Bitcoin mining like we've talked about before, but it's a bob and weave situation. You're going to have to get it figured out. Emmanuel says that you skipped my question. If you didn't tag at son of a tech, I don't see it here at all, bro. So, sorry. It's not in my chat. So retype it. That would have been better. Texas A says, at son of a tech, true steady state power limits of 120 volt are a thing around 1500 watts. I think it's like 1600 watts, but if we looked at, what was it? The thing I have a question about too is if we looked at the requirements even for this 1000 watt and 1300 watt, their voltage ratings are 200 to 240, no 120 in there. I feel like we need to understand the specifications on these specifically too. Like, are these only spec'd out for like specific geographical locations? Is this not going to be a US release? That sort of thing. Maybe I'm reading it wrong. Yeah, Texas Ace, that's what I'm wondering, if it's EU only power supplies. And then that would be interesting because that would mean that we don't even have a power supply availability for stateside, right? For these new ones. It does look like European voltage. And my assumption would be is that they were able to develop it for EU standards because of the higher voltage, and they have not yet figured out how they're going to do it on 120 over here. We'll have to see what happens, right? Mike T says, who do you think the next Texas governor will be? I have no idea. LZ22 says, as time of tech, I would assume it's going to remain Abbott, right, for this go around. LZ says, ask time of tech, what are your thoughts on selling my rigs and buy Flux for cheap price and going for a Stratus node? Probably energy prices will go up in Europe soon. So obviously not financial advice, but you would be specifically invested in one single coin, which means you have a single point of failure, which means you increase your risk exposure significantly. Thanks for joining, or member for 4 months. Mr. MC says BTC for the win. Yes, sir. Forum says, ask time of tech, have you looked at other options for making profit from GPUs, machine learning, AI? Yes, I have. They are out there. I haven't really gotten deep enough. I'm aware of them and I've looked at them. I haven't gotten deep enough to see if they're really feasible. Minor Illusion says, ask time of tech, any idea what happens to existing ETH that's held in a wallet at the time of upgrade? I think it just transfers right over. We'll have to see what they decide, but I think it's going to be a smooth transition, or that's at least what's planned, right? Texas A says, ask time of tech, are those EU power supplies? That's what I'm wondering. Dep SN says, ask time of tech, is a 3070 Ti good card for mining? By most accounts, people say that it is. My experience with a 3070 Ti was that it did require a lot more power compared to what its hash rate was, but it is getting better with the unlocks as well. Emmanuel says, ask Scientific, it had to do with proposed cryptocurrency bill in Oklahoma. Maybe it deleted because it had to do with the medicinal MJ, Mary Jane. What? Pohig Mining says, at Scientific, just found out the EC100 coolant is safe for acrylic tanks. Have a 10x3 acrylic fish tank looking at liquid cooling 3 gigahash worth of my farm by the end of next month. Let me know how it goes. I've been looking at that too. I don't know if I want to or not. Hank Moody says, at Scientific, GPU mining will return. I think GPU mining will be around. It'll just be, I think we are going to see a significant shift, but you know, not financial advice. Real Gross says, ask Scientific, looking back at your mining journey, do you have some tips that improved your efficiency on the mining business? Easy, like getting test benches, etc. I mean, obviously, thanks to the YouTube channel, I get to test the GPUs, and then I understand what my kind of limitations are for overclocking are going to be, meaning it's easier to build the rigs and get the initial settings set up. I think you can find most of that information online though too, without having to do the testing yourself. Clearly, like investing in like platinum rated power supplies can reduce your power consumption significantly, which can help. And then if you can get those fans tuned in lower and lower, the biggest thing is like, just turn your overclocks down. You don't need to be hashing at the full hash that X YouTuber said that you can full hash at, even mine, right? Don't be afraid to just turn your overclocks down and get 24/7 stable, because that's going to be way better than, it's essentially, that's going to be way better than a high overclock that's causing rig reboots all the time, right? So that's kind of how that would be like the biggest one. And then from there, like things to just get your power down, moving to like 200 to 240 volts, utilizing platinum rated power supplies, that sort of thing is going to help you. Anthony Cabral says, ask Scientific, your positivity and enthusiasm towards mining has encouraged me to start my own farm. Keep up the good work. Well, enjoy the process, man, and keep moving forward. Jorge says, ask Scientific, according to Daniel Keller from Flux, proof of work consensus is the best around. Do you agree with this? Yeah, I agree with Daniel Keller on a lot of things. Definitely with proof of work, I agree with him as far as that goes. I think, though, that when it comes from someone like that, it's important to understand where it's coming from. It's also coming from the fact that I think that he's fully aware, and I think that this is something that Ethereum's missing. I think that Daniel Keller is fully aware that GPU miners are GPU miners are a very influential piece of the cryptocurrency market. And because they have been involved in the minting process, they have the most widespread amount of users, and they definitely influence the price of cryptocurrency, and they definitely are the ones that participate within the networks the most. It's really good to keep GPU miners on your side. And if you're looking at a potential, so how would this go? Imagine you have two countries, right? And one country's done really, really well. And let's say they're a democracy, and the other country is kind of like just getting started, maybe the early stages of democracy or whatever. And the country that is established in democracy decides that they're going to change their mechanism over to communism. They want to basically have all the wealth given to the government to disperse out to the people, and they basically ostracize a portion of the population. And that population looks for somewhere else to go, and the other government that is a new democracy decides that they are going to attract these people because they are hard workers and they participate within the economy and help boost the economy. Well, where are those people going to go? They're going to move over, right? This is how that is going to function if they are able to move over. That's how I see Ethereum versus all of the rest of the network when they start vying for miner participation. Flux has a very specific strategy here, which is to basically give miners a place to go so that they can boost their own economy. Same with Ethereum Classic, same with Ergo, etc. Really, any of these projects that want to have really, really good adoption, they see a boost in their trading volume, see that happen. They want miners to move over to them from Ethereum. I tried to articulate that the best that I could. Benjamin says, at Symantec, I'm getting out in Europe. The power prices went way too high. I have contracts for cheap power until the 31st May, but then the price effectively more than doubles. Then it's over with mining. Yeah, and there will be, I think, in my opinion, there will be a significant amount of GPUs going onto the network from all of these power price increases from everywhere. Your best bet, honestly, if you're already lucky enough to be in a sub 10 cents a kilowatt area, then mining is for you. Just start getting ready, because you're going to be able to pick up all of that stuff. And I think it's going to be pretty significant. You're going to have a significant opportunity. If you are wanting to participate and you are not currently in a sub 10 cent a kilowatt area, you want to participate from a mining perspective, you may want to consider moving, right? That obviously none of this is financial advice. We don't know if it's going to work out, but there are opportunities there. And I think that will be because, unfortunately, though, we will see a concentration of, a lot of mining power in places like Texas, etc. RPN Chilled said, ask Symantec, are your CPUs mining anything at the moment? Yeah, they're mining Varus coin, and then back here this one is mining, what do we have it on? Haven coin, I believe. Yeah, Haven. And that's the new 5800 X3D that I need to get the deal out for, but I haven't quite yet. Henry J. New York says, ask Symantec, would you solo mine Ethereum Classic or Ergo with 4.7 gigahash? You could do either or, keeping in mind that putting 4.7 gigahash on either network will increase the difficulty. I think you could do something where you did Ergo for a little bit until the difficulty rises, then move over to something like Ethereum. Classic, I didn't see that Ethereum Classic was as reliable for solo mining at around 5 to 6 gigahash a second. I think Ergo is a little bit more viable there, but you are taking a risk, right? So that is a risk there for sure. John Paul Jones says, ask Symantec, do you think there is a better way to do a mining pool that is a hybrid of a solo and a regular pool? So I think not from a monetary policy, right? Not from a monetary gain, but from the perspective of distribution of the network, I think it's important. This is a concept that has been going around in Bitcoin for quite some time. It was known as P2 pool. What that basically allowed people to do was set up their own nodes and connect it to basically a group of nodes. And then they were able to get the benefits of a mining pool, but further distribute the mining hash rate. It wasn't as profitable as pools, so obviously everybody went to pools. There are a couple more ideas that are getting floated around surrounding Bitcoin for this, and I'm keeping track of them, but nothing has really come to fruition as of yet. Simpson says, ask Symantec, for those who live in humid and salty areas like light coat of WD-40 on the cards help. It's non-conductive, rust preventative, and drives out moisture. Emmanuel says, at Symantec, Oklahoma is trying to allow dispensaries to use crypto banking system rather than traditional banks because it's still illegal federally and they can't use banks for the business. I am going to look, everybody, if you want the homework, here's the homework for the week. I want you to go onto Audible and I want you to get the book called The Sovereign Individual, and I want you to listen to it so that you understand what's happening. And things like what is happening in Oklahoma is going to happen globally. This is going to be a transfer of not only wealth, but of power from nation states to the individual. And it is inevitable thanks to the digital age. And I think that we will see this happen within our lifetimes, and it's happening right now, and it will be more and more common. People will start utilizing crypto, and as much as the nation states try to combat that, and corporations, etc., it will get worse and worse, and more people will utilize it. It is impossible in the digital age for the nation state to fully control it if people decide that they don't want to control it. It's going to cause huge economic disruption and probably utilize anything from wars to famines to control of the food supply to manipulate people to basically adhere to the old guard. But I think eventually, no matter what, it goes away. That's all opinion. Please listen to the book, and we won't cover that anymore on YouTube, but I am working on some other stuff for my Substack, etc. Aggregarker Visuals says, Ask Tech, over a year ago, I decided to get into mining after pondering it for many years. Your YouTube helped me get started, and it's changed my life. Thanks, man, and keep up the good work. Thanks for the support on the channel. I'm glad it's changed your life. Andre Morris said, hi, at Son of a Tech, which are crypto coins that consume the most energy when are mining? Flux, Ravencoin, Toncoin, those three off the top of my head. Daniel Ring says, at Son of a Tech, the drop in crypto market hasn't been too bad compared to the rest of the market sentiment. I'm still buying hardware. Yes, what we have going, of course, here is that I think there is going to be a realization. Once again, your homework for the week. Go get The Sovereign Individuals, written in the 90s. You'll be shocked at how many things are coming to fruition, and you may get a better idea of what is happening. And I think that you will then see a little bit of what's happening regarding, of course, the crypto markets, right? Gaming Vid says, at Tech, I think GPU mining will die if altcoin prices don't rise. Look, here's the deal. This has happened before. Anybody that has been in here has been mining cryptocurrency or GPU mining or crypto mining in general through basically the past, since its inception. If you've gone through a super cycle, you understand exactly what's happening here. So, will mining die? It'll look like it died to everybody that gets out. And then in 2025, all y'all will be back at the channel. We'll have record numbers. Maybe we'll hit 1 million subs on the next bull run. And everybody will be like, you're so lucky. And at that time, I'll be 20 years into making YouTube videos about cryptocurrency. And I'll be giggling saying, yeah, it just happened overnight. It's just, dude, it's the same thing every time, bro. Hank Moody says, at Simon Tech, what do you think about the future of Raven? I think that it has some issues from infrastructure standpoint. I think that it's hard to mine. LZ says, at Simon Tech, you want to buy more GPUs, then you can't move to Texas. Well, I'm not purchasing GPUs right now because I am purchasing more power, but I will be purchasing more GPUs once I have more power. I'm purchasing more power and ventilation right now. Metal Miner says, Ask Simon Tech, congrats on 100. Keep up the good work. Yeah, we're on episode 100 today. 100 episodes of the Crypto Mining Show. Andre Morris says, Ask Simon Tech, what do you think about the 2080 Super? I would rather have a 2080 Ti personally or a 2070 Super. Usually. Matthew Tong says, at Simon Tech, that's true. I'm concerned about my portfolio of stocks for the same reason. 2 of the companies I hold shares in have offered alternate tokens that are pegged to their physical assets. I think that'll become more common too. Minor Illusion says, at Simon Tech, mine or don't, get in or stay out, but mainly stay calm and mine on. Right. So we have the t-shirt down there. Shameless self-promotion. Keep calm, mine on. And it's one of those things where if you don't want to be in it, if the risk seems too high, I don't judge you. I got out before. I did it. I made that mistake. I considered that a mistake, not financial advice. I consider getting out during the last bear market a mistake. I will not get out this bear market. I will struggle. I will sleep on my parents' kitchen floor if I have to and be making videos, and everybody can be like, look at this idiot doing crypto and he has to live with his parents. Sure, I don't care. We're going. It is what it is. We're going for it. Raymond says, ask Tech, are you buying GPUs or ASICs and why? So I'm buying a mix of both GPUs and ASICs, and that's because diversification. Also, I don't think Bitcoin's going anywhere anytime soon. Dr. Bootygood says, that's Tech, no question, just saying hi and keep up the good work. Thank you, good sir. Minor Illusion, thanks for the $5 super chat. Says, congrats on number 100. We'll be on number 105 next week. Yeah. Flat Smack says, wouldn't crash. Crash is happening right now. I think we will see, look, it's going to filter out the weeds. Is it going to crash as hard as it did last time, down to the previous all-time high? I don't know. I feel like it should have already, but it didn't. And I think getting some more perspective on understanding what's happening with this transformation that's currently taking place, from I believe it's like a mega political standpoint, and doing more research on that, I kind of understand what's happening. I think that what we're going to see is I think it could get really a lot worse. I think that the reason it's going to get a lot worse is that you are going to see basically a complete decoupling from traditional currencies and cryptocurrency, meaning that you won't be seeing the value of Bitcoin or cryptos from the perspective of how much US dollar they're worth. And I think that's going to happen pretty rapidly, like within the next few decades. I think within our lifetime that happens. And the reason for that is everybody that controls traditional currencies is going to block the participation of anybody that's participating within crypto from participating within said currency. So whether that's the US dollar, the yuan, etc., they are going to completely try to prevent you from participating within that. And then eventually they just kill themselves off because everybody will begin to start transacting with each other purely within cryptocurrency, and they will no longer care about the price of any nation state's currency. Once again, your homework is to go listen to the sovereign individual. Andre Mora says, at Son of a Tech, congratulations on the best show for crypto mining. Thank you. Christopher Robinson, at Son of a Tech, been trying to look at new mining coins. Are there any new coins that seem like they could be a good speculative mine, not financial advice, of course? I think Caspa might be a little too late. I know FPGAs are getting onto that pretty big. There is an old one that kind of got repurposed that is in a speculative state. You could still sell it technically, but I would say it's kind of in a speculative state, and it wouldn't be for GPUs, it would be for CPUs, and it's called Darrow. And I'm kind of interested in what's going to happen with that. Detroit Iris says, thanks for keeping my day bearable at my 9 to 5 these past 100 episodes. Thanks for watching, and hopefully your days get better and better. It's all good mining says, Tech, have you, got a super chat that kind of bounced that forward. Let me finish this one though. Says, have you explored running a Bitcoin node like a Lightning node? I have some Bitcoin nodes running, not a Lightning node though. I'm trying to think. I guess one would be Lightning node. I do run them just because, but I like, there's no profit in it, right? We have another $5 in euro from Real PC Benchmark said, did you talk about Central Africa and Republic adopting Bitcoin as legal tender? No, I have not. That is an interesting one I'll add to my list. LZ says, at Son of a Tech, would you do mining as a hobby or only with a business plan in mind? Look, if your intention is to do something to create some sort of wealth, then you need to treat it in your mind as a business. So mining falls into that category. Whether you're making $1 a day or making $200 a day, that's how you need to treat it from your perspective. Polytecal says, at Simatech, would you still consider Raven hard to mine if prices go up considerably with use case adoption? Blockchain, stock market, big brain, I guess you're saying. So would you still consider Raven hard to mine if prices go up? It has nothing to do with the prices. It has to do coming from the perspective of an infrastructure provider. It is the damage and the amount of heat and the amount of power, the requirements from an infrastructure standpoint purely. It has nothing to do with price. That makes me say Ravencoin is hard to mine. Ravencoin is not hard to mine because of its current price or current difficulty mark on the network. It is hard to mine from a purely hardware perspective. You're putting a lot of demand on the core itself as well as the memory, which means your thermal paste will need to be replaced more often. It means that your spin up and spin off times are going to be significantly more important, because if you shut down those rigs or they're restarting too quickly and the room is hot, you will experience core degradation. And I have specifically on Ravencoin. You require more power, meaning that your 80% rule gets changed on all of your rigs compared to Ethereum, meaning you need to pay attention to basically how big the power supplies are, how much power you have coming from the wall. It is difficult to mine from an infrastructure standpoint, has nothing to do with price. Real Rigo says, at Son of a Tech, where do you find cool new projects to look into? See, I'm a little lucky because I have a YouTube channel and you guys tell me. So Rocket Chat, DMs, Twitter DMs, whatever it is, it's usually one of you guys telling me about it. 99% of the time. I am not the creator of the ideas that when I find coins, I'm just taking it and relaying it to you guys. Thanks to you guys. This is a community. This is what we do, right? So I'm as reliant on y'all for news topics, finding new coins, and so on, as y'all are on me. I'm just kind of the mouthpiece for the community. That's it. Gaming Vid says, at Son of a Tech, how does the ERG difficulty issue affect miners? You've never mined Ergo before. All right, this will be the last one that we take. So for Ergo, what you have to understand is that they have a delayed difficulty realization, I suppose. So you basically, the difficulties here, it's a flat line. A whole bunch of people come on to mine it, right? As opposed to the difficulty adjustment reacting quickly to that and starting to shoot up the difficulty based on the amount of hash rate, it's applied a few days later. So you end up having this weird case where a lot of hash rate doesn't necessarily mean a lot of difficulty. And then once that happens, all the big miners just pop right back off. And all of a sudden, everybody that continues to mine it now has a significantly reduced amount of profit for, once again, a few more days before it drops off. It's a delayed difficulty realization, causing some weird network issues and definitely causing very, very difficult mining issues surrounding basically determining your profitability and so on Ergo itself. If given enough time, the hash rate stays the same, it's a non-issue. But the problem is that's not what's happening, because there are miners that have figured this out and are actively doing it. I hadn't talked about it a lot until we started really looking at the difficulty charts, and now I talk about it because you guys need to be aware of it. Big miners are coming into Ergo when the difficulty drops off, and for that few days, 3 or 4 days or whatever it is, they just throw a ton of hash rate on there and it's extremely profitable, and then they dump right back off and jump to something else when they start to see that difficulty actually get realized. So it is what it is. You got to be careful when it comes to that. Thanks everybody for the support today. The like button is where you can show that support even more. I'd like to see us crack 500 concurrent viewers one day. So to help me out with that goal, what you can do is share the show out with your friends, family, and colleagues. Let them know about it. You can basically also listen on Spotify if you want to later in the car, and definitely go check that out. And I am going to head to jiu-jitsu and then basically get back here and try to get some more work going. I have the review for the 5800 X3D kind of prepared. I don't know if I'll get it done today. I'm going to try. But things are a little bit bumpy where we got family in town. So a lot of stuff has been, I was helping family out this week as well. And then I was doing some video work for a documentary on 80s Christian hair metal as well. That's a random thing for a Netflix documentary. I just kind of volunteered there. So thanks for watching. I'll see you guys next Tuesday.